Yes, 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 yes. Let's turn this down. Get control of my damn mouse. What's going on, man? Hope everybody's doing well. Hopefully I got some sound. Hold on. What's up, YouTube? Went live before I was ready. Hold on. There we go. All right. Cooking with grease, man. Got notifications. Yeah, turn them on. Seems like they work most of the time. Do I have a live tomorrow? Man, I don't know if I have a live tomorrow. I go live most days. I try to go at least on Monday, Wednesday, Friday. Then I go Thursday night with Campfire Real Estate. But what's up, guys? Try to go most days. If the market's really boring, sometimes I won't. A couple things we're looking at. I'm watching I had a nice move on the short term here on TQ. Market opened here. We were already long into the close on yesterday. A little concerned. There was a lot of negative news that came out last night. It's the only problem in carrying over a trade. We'd had a big winner here. It's on a smaller time frame, of course. Stage 2, went into a 3, got out. It turned right back around. We're back into the close. Market opens, runs up, tagged my my target. We came back down, didn't get stopped back out, came back up. So if you're in Discord and follow this, it can be a lot. And if you're working, it's obviously probably impossible. So there's our buy, right? Stage 1, and then now we've run. And as I was coming on the live, I took half of the 1,000 shares down. So during the live, I'll probably close out the rest. Don't want to get too greedy. But that, if you look, the TQ, let's get back to the daily here where most everybody else trades on. Nice big bar here. Bam! Nice move, man. Back above the 200. So I don't know. Maybe I'll hold this over. Maybe I'll just downsize it to a couple hundred shares just in case it goes against me. But we've had a nice run in this. And I don't know if I have a lot of newer people that have traded with me, with us. That's not a reason to sell, okay? This is just normal movement. I mean, whenever the RSI hits a bang, and you can anticipate that it goes sideways. If you dump these every time, you're going to have a hard time catching big winners. So what I like to do is just take them down if I'm going to do anything. But that right there is a reversal candle. So you had a slight down move, market reverse. Now we're headed back up. So we're doing pretty good. Plus, we talked about this yesterday, I think. We have a lot of support right here, right in this range right here. So crazy support right here. I would have been surprised if this broke, but you never know. We don't know where the market's going, right? Yeah, so I wanted to talk about, so TQ is still on track. If you're in that as a long-term swing trade on the daily, I would not be, maybe you took some down. I would wait, let the rest run. Money Flow Gang, we've been trying to play UNG. We got back in the other day. I had closed it on here, probably a little premature. I should have given it a little room. I got a little frustrated with it, but I also needed the capital for something else. And so we've had our stop right down here in like the 780 range. Appreciate that, Lisa. Appreciate all the birthday wishes. If I didn't respond to some, I apologize. I had a bunch, man, and it takes a minute to get through all of them, but I see them. I appreciate it. Um, anyway, I had closed it out. I know a lot of people left it on. Probably the smart move. I was a little frustrated with the nat gas, and I needed the capital for something else. It held it, and I got back in. Came down yesterday, and I'm like, we got to stay with this unless this breaks. And now we're headed up. So, keep the money. Look, it's not going up here. I mean, obviously, theoretically, it could. Don't use that as your target. Just ride it up, and money flow rules apply. So we'll anticipate sideways movement, which we got now. We'll have a breakout, and then things will run sideways. And we will let me post this. If you're interested in trading with us, just send me a text message, man. You got to own my book. You got to read it. Can't be a dipshit. Okay? If you know you're a dipshit, don't bother. Can't be argumentative. Yeah, so I think UNG looks good here. If we break it, I know some people were watching it pretty closely, which is probably the thing to do when you're dealing with something that's playing with us like this. It can be playing with our emotions, so to speak. And we talked about this. I don't know if I talked about it in Discord. I know me and my buddy Matt were talking about it. It wasn't as clear, but he was watching it on these lower time frames, and you could see the pattern. It wasn't, perfect, but you could see, got a little choppy in here, but if you back it up a little, you could kind of see the pattern playing out. And he was, taking it down lower, trying to catch it. And that played out great, and we've seen a nice move in it. A lot of people played Boyle. Man, it's so fucking leveraged. Let's look at Boyle is a real mover. Be careful with that. You can make a lot or lose a lot of money. Like Boyle's up 10% today. For me, UNG trades just fine. It moved 4, 5, 6% a day. I'm cool with that. Boyle's a real mover though, if you catch it. But don't let this deceive you. These triple leverage, remember on the way down, they're going down 3 times, okay? So, and they also tend to do reverse splits in these things. So, don't let that deceive you, those numbers. Going back up, it's going to go up. It's going to do the 3 times, right? So, and one thing I emphasized the other day is like, this is not something where you're like, oh, it's nat gas, can't go to zero. I'm just going to own it. It could stay down for years and years and years and years and years. Stocks or commodities can break you. Like you can't outweight them. They can outweight you. Because a year in and you're still just bleeding, you will eventually give up on it. Very rarely can someone just hang in there for long periods of time when it's just killing them. And it's just not a good strategy. You don't want to tie up capital in something that's doing like that, especially from a trading perspective. Investing, a little different. So far it's looking good, man. We're doing well. Let's talk about the coffee trade. I hadn't talked about it because once they go up, I stopped talking about them. Talked about this for a while. When these commodities get below the 200 like this, that's when I'm interested. And started picking up this coffee over here. Came down, picked up some more up in here. And now we're up, I don't know, 15, 16% in the coffee. Not the most exciting trade. I think I lost some people when it came down. It's coffee, man. Much like nat gas, much like oil, it's a needed commodity. We've had a nice run in this. I actually had a friend who had a buddy who works in the coffee industry. He was saying he thought it would be down for a long time. Back to my theory, nobody knows shit. So any of your friends that think they know something, they don't. Nobody knows. If you knew at all what a price was going to do, you'd be a billionaire. Especially people that work there. Half the time they don't know. Because something just like that can change everything. So it's going up. We'll see. I'm pretty positive. I don't mean I'm not positive, but I did not trim any on this move here, and I should have. And I was going to kind of give it a minute. The reason is, well, one, my position's not that large, and we have some. If you've read the money flow, previous resistance tends to become support, and that's exactly what we saw here. It's exactly what we're seeing in the TQ. Wherever you have previous resistance, it tends to become support. Obviously you run a risk if you're, trying to predict with that, but I felt like it would stop there. My position wasn't that big. We're still under the 200. I'll give it the benefit of the doubt. Now we're moving higher. So probably this next RSI, I'm going to take some down. Again, not a large trade for me, but it's something I like trading. These commodities can move really slow, but we track several, right? Not bonds, oil, nat gas. We've been recently tracking coffee, and then gold and silver are setting up. So if we look at the AGQ, yeah, still hasn't quite gotten there. I'm waiting on this anchor point, man. And I think we're going to have it. I got a feeling this is going to end up being about the anchor point. Right around in here. These zones aren't perfect, but this is a zone where it has stopped several times. In here, in here, in here, and over here. So support, resistance, 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 support, and now I got a feeling this is going to be our anchor point. Need to see that, well, the MACD's already turned, so just need to see it hold. And this is a triple silver. You could trade the unleveraged SLV. Gold is setting up the same way. Bitcoin is tracking the same way. If you look at Bitcoin, same thing. Let's see. Appreciate you, Tina. Oh, Tina, what did I say? Tiny Ninja. Yeah, big move out of PLTR. I own it. I wouldn't trim any here. It's not one I've been adding to, so didn't really talk much about it. I think it'll go higher. Man, I would not have advised buying call options on Lyft. You should get my course on getting started with stock charts the money flow way. Yeah, I mean, it's probably working for you. I mean, I could be totally wrong and this thing just takes off. Anytime, this is just a rule of thumb for me. Anytime a stock falls this big, I don't do anything anytime soon. It's too much heartache in a lot of people. They don't, it's so big. There's usually something really wrong. Every once in a while, we can recover immediately. I have a 3-day rule. I don't even consider it for 3 days. And even then, this could be the anchor point. You might be all right. I don't know. There's no way this thing runs without these moving averages coming down to it. So it's got to come down. I mean, look at every breakout you see. The moving averages come together. You see how far away these are? We call that a broken family inside the money flow gang. This is a broken family. Whenever you see a broken family, it takes weeks to months before a stock will do anything. Let's look at FedEx as a recent example. FedEx got smashed. And we could do chart after chart. Whenever you have that big a gap, it takes weeks to months. And if you watch, by the time we started to go sideways, It's 1 day, 2 day, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. It's 1 month. 1 month from the day of the hit. And so during that 1 month, rather than tying up your capital into something that's just going to go sideways for a month, you could be trading it or doing things somewhere else. Also, it wasn't the bottom. Look, it kept going down, 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 down. And so you want to wait till you get a solid bottom. And you say, how do you know? Because you get 4 more bars that go above it and price gets above the 5-day moving average. So I would have called the bottom right there. And then I would have called that the anchor point. And then from then on, we have something to trade on. And for me, that's just being able to repeat the same process over and over, over and over and over and over and over and over and fucking over and over and over, exactly the same. And if you can do that, then, you can really begin to multiply money, man. Let's see. Yeah, he said BXRX didn't recover. Sometimes they don't, man. Sometimes they don't recover. Sometimes they go to zero. Some stocks go to zero, especially penny stocks. Anyway, we've seen FedEx since then just run up and do well. Let's see. We saw that in Netflix too, I think. I don't trade Netflix. Me and Netflix don't get along. No, it wasn't Netflix. Anyway, those can be great setups when companies miss earnings like that. It's funny, if you're on one side of it, you don't like it. If you didn't own the stock, you like it. And it comes back to people placing value on, never place any value in what you paid for a stock. That is the hardest lesson for people to understand. What you paid for it does not fucking matter. It has nothing to do with the value of the stock. It has nothing to do with where the stock might go. You should never enter the equation of whether you sell a stock, trim a stock, buy it. It should have nothing to do with what you paid for it. If you're doing that, you're fucking up. You don't understand investing. It has nothing to do with what you paid for it. So if you're making decisions on stocks based on what you paid for it, then you're doing it wrong, man. It's so hard for people. I'm telling you, it takes a long time to get this through your mind. And like, I'll do one-on-one coachings a lot of times, and if you've done them with me, you'll hear me say that to you. They'll go, well, I paid, and I'm like, don't give a fuck. It doesn't matter. What you paid has no bearing on the value of the company or whether it's a good deal or a bad deal. It really doesn't. It means something to you, but as far as making it a good trade or a bad trade, it doesn't have anything to do with it. One thing to point out on this one, this is your anchor point. Up here, we call it an apex point, though. Apex. They're not usually this distorted. What's up, Anthony? They're not usually this distorted, but you'll see this top down here at the bottom too, where you get one where it's like say over here, this came way down and then very quickly it comes back up and starts going sideways. Well, that's the exact opposite. If you were to just to flip this chart around, like sometimes print off a chart and flip it around. And when you flip it around, you'll see the top and the bottom are basically the same, man. It's all the same. So this was our apex point, but then you see the stage really starts here. And if we do the reverse of a stage one, what do we see? 1 day, 2 day, 3 day, 4 day. Now price is below the 5-day moving average. We can confirm that this is probably a stage 3. Doesn't necessarily mean we want to sell it until we break down and now we're in a stage 4, right? In stage 4, we know is the best time to get out, or short it maybe if that's what you're trying to do. I don't short anything when the market's going up. I see people trying that. That's an amateur move, man. Trying to short in a bull market is for suckers. Telling you, rarely do you see professionals trying to do that unless they're hedging, like a hedge fund, short Coke, long Pepsi, short Ford, long Tesla. They're doing like a pairs, short long. You'll see that with a lot with hedge funds, but that's a different thing. So here's something good. Somebody mentioned on knee, we're seeing a conflict. It's divergence is what they call it. And price is not, um, I don't know why this would confuse you. It's a perfect money flow pattern. Yeah, this is perfect. I don't know what's confusing about this. There's your sideways. Now remember, the sideways can go weeks to months. Look at this. This right here, stage 3, went from December almost to February. Now I know some of you might pee yourself a little. That's such a long time, 60 days. But that's a giant stage 3, man. And sometimes we're lucky and the stage doesn't last long. I like them to last a long time personally. Yeah, this is perfect. You got a stage 1 breakout. I mean, it's not a breakout, but this is perfect. The only problem you have, thanks, bro, for the badge. The only problem you have, is this sloping 20-day moving average. And when it gets up there, you're going to see it pause, just like you saw here. That moving average has to turn or it can't go up. And you see how it paused right here? Now that'll trick a lot of people and they'll be like, oh, stage 1, 2, now it's going into a 3. And they start to prematurely want to sell the stock, man. It's like, bro, the RSI is not even extreme. Relax. Give it a little time. You know, and then look, you see it go up. It's got to turn this moving average. That shit takes time, man. So you're in a good trade there. Hopefully you got in right there. 4th day, and the day that you get price to go above that 5-day exponential, that's your day right there. So hopefully you're in it. Looks good. Congratulations. Good trade. Be patient with it. Now, let's say this is down here, price is down here, and you're seeing the TSI rollover or the MACD rollover, or everything's breaking out, but the stock isn't going. That's called divergence. And usually the price will follow the indicators, is the way most people trade that. GP, I need to read something to understand what you said about what we pay for a stock doesn't matter. I want to understand it better. All right, I'll say it to you real simple. It doesn't fucking matter. There you go. It doesn't. I mean, seriously, like, get on the phone today and call all your friends and say, hey, man, I paid $86 for this stock. Do you care? And they're all going to go, no. Well, shit. Maybe it matters to mama. Call your mama and say, hey, do you care what I paid for this stock? And she's going to say, no. Well, shit, who cares? You could come over here and go, and this is such a hard, I'm telling you, this is one of the hardest concepts to understand. Because you may have paid wrong, okay? So let's say you bought the stock in a bad spot. It's a bad price. So now we're going to base future decisions off a shitty decision? It makes no sense. So whatever you paid for it is irrelevant. It doesn't matter. It shouldn't come in. It's either a good stock or not. It's either going to go up or it's going down. What the price that we paid does not matter. So if we come over here and we put in, say, let's just pick one. Let's put in knee. And let's pretend, just play with me for a second here. Not physically, you'd get in trouble if I was to tell on you, but maybe I wouldn't. I don't know. But if I did, you might get in trouble. So let's say right here, you bought this stock. And let's say this stock collapses and you're like, man, I got to get out of this stock. And I'm like, okay. I was looking at buying it. And you're like, yeah, but I'm down like 30%. I would respond to you, who gives a fuck? I don't care. But the only reason you don't like it is you paid $85. Now it's $74. And you're like, I don't like this stock. And I'm looking at it going, man, it's only $74, huh? I don't even care what you paid. So I come over here and I look. Morningstar doesn't care either. And I come over here and I look and see, well, what does Andrew Bischoff say it's worth? Investors should pay attention to the increased regulatory uncertainty in Florida. Now, this is one reason I haven't moved on this stock, and I'm just using it as an example. I kind of don't like this stock. I know a lot of you guys do. If we look, it says it's trading at an 8% discount. The fair value is $82. I don't like that. Well, you paid 84. You overpaid. Now it's 74. You're like, well, I'm underwater. Yeah, but is it a good deal right now? It's like, yeah, cool. You should buy some. See, what you paid doesn't matter. Man, you got to think on it. There's nothing to read. But if you do need to read something, go look up. Harvard Studies did a thing called sunk cost analysis. Budget Dog's here. He knows what that is. We got a celebrity in the house. Let's see, sunk cost analysis. Let's see what comes up. Wikipedia. I didn't even go to college, and I know this. Some of you guys went to college, don't know. Sunk cost is money that already spent and cannot be recovered. In business, the axiom that is one that is spend money to make money is reflected in the phenomena of sunk costs. Sunk costs differs from future costs that the business may face, such as decisions about inventory, purchase costs, or product pricing. Sunk costs are excluded from future business decisions. You can go in and read about this. But in other words, what you paid, it don't matter. It's already factored in. So we got to play the hand we have right now. So it's $76. Is this stock undervalued or overvalued? And you say under. Is this stock breaking out or breaking down? It's breaking out. So if I didn't own this stock, should I own it? And you're like, well, if I didn't own it, yeah, I wouldn't mind having some here. Well, then it's a good deal. It don't matter if you paid $100. It's still a good deal. You can't let the fact that you overpaid or were a dipshit in the past affect a good deal today. And that'll keep people out of properties, man. I used to see in 2010, he'd be like, well, I can't pay that. I could have got it for half price last year. Well, you don't live in the past. You live in the now. I'm telling you, if you get that concept, it's gonna help you a lot. Let's look at Lyft. It's a quick example, real quick, and then I had a friend. He knew I liked it. He bought it up here. Now, I would have said, don't buy it up here. You know that. Once this goes green, you don't buy a stock. Once the RSI goes 70, you do not buy that stock. You don't. It doesn't make sense. Also, you say, well, I paid 30. I can't take profits. The RSI doesn't care. It's still going to go down. And you're like, what do you mean? Well, let's say over here, you paid way up here. And you're like, well, I can't trim it. I can't take profits. I paid more. The RSI doesn't give a shit. Still goes down. So once you get this concept, man, it'll really free you. Never look at what you paid. It doesn't matter. So, if a guy bought Lyft here and it ran up, and then it came back, he's just back where he started. If a guy bought Lyft here and it came down, he's underwater a lot. Now, the guy that bought it here is probably like, cool, I can buy some more. That was me. So I'm looking at buying more. Well, if you bought it up here, you don't like this stock. Do you see how making your decision based on buying it here about down here is really stupid? It has nothing to do with the value of the stock or the company or the future projections or the income or nothing. It's all based on what you paid for it. So, man, think on that. Think on it. Think on it. Let's see. With that said, I'm not saying you never sell. I have people sometimes go, well, I can't sell that stock because I'll have a loss. You already have a loss. It's in your account balance. You don't have to make the money back in the same stock, guys. Oh shit, my thing got hit, so that's cool. You don't have to make the money back in the same stock. Again, people get hung up on what they paid for something and what they own. It doesn't matter. You can close that out And I don't consider it taking a loss. I call it asset reallocation because, to me, it's not a loss. I'm just moving my money to better opportunities. So I don't even speak like that. I don't use words like that. I don't lose. I just got out of the trade. Now I'm moving the trade to something else, man. So I don't talk in terms of like losing and winning. It's not what it is. You're just moving money to something else. So don't hold on to losing stocks just because you bought them. That doesn't make any sense. Looking at selling puts if you're thinking of buying Lyft. Selling puts. Oh, I'm buying Lyft. It's going back to my highest conviction list here shortly. Lyft will be purchased and taken private, or an activist investor will come in very soon. No, this is Kellogg. So this is on our buy list. Breakfast cereal company. They own a lot of stuff. Stage one, undervalued. Good stock. So been accumulating here. Bought some more CVS today. Still a stage two. I had people concerned this wasn't a stage two. Again, stages are not 2 or 3 fucking days. It takes time. You can be in a stage two for months. You can be in a stage three for weeks and months. Like, it's not 3 days. So as long as this RSI didn't go extreme and prices above the 20, it's still a stage two breakout. So I stay with this. The target is $94. It might just take time, man. I'm telling you, man, if there's 3 things I could help you with. 1, what you paid for a stock does not matter. You'll struggle with this. A lot of people do. 2, you don't have to make the money back in the same stock. Selling the stock you're underwater in is not losing. It's fucking dumb. You're not losing anything if you put it into another stock that goes up. You're trading your balance, not the stock. You're not married to them. Unless it's in a buy and hold, that's a different conversation. But you can sell a loser, and if, and learning to use this RSI, huge. I would never buy a stock without looking at the RSI. And then learning to incorporate fundamentals into what you're doing. So we want to use charts and fundamentals. You want to combine them together. You should never buy a stock that you don't know the value of the company, what stage it's in. Never. So I would never buy, I would always lay the money flow over anything that I'm looking at. Like we were talking about AI. We traded AI a lot last year. And I was talking about this the other day. When this pulled back, if you want to try to get into a move you've already missed, well, the way you do that, you would just drop the time frame down to say a 15-minute. Remember we talked about this as a stage one. There's our breakout. Now we see it moving higher. RSI went extreme. So as a day trader or a short-term trader, I'd be out of this now, or at least sold most of it. There's your stage one. There, boom, there's your breakout. So we had already been trying to get in, right? Boom, moves up. You could add here. What happened? RSI went extreme. Where did it stop? Right where it stopped before. So if you look over, bam. That's trading the money flow in a shorter time frame. So a lot of times people ask me, does it work with day trading? Of course it works with day trading. It works with everything. It's how price moves. Look at Tesla. This is one I put in Discord yesterday. So if we look at the daily, remember it had run up, pulled back a little. I took some off of this actually right here. And it wasn't so much that I think the trend was going down. I just have some other things I need to put money in that I think are going to outperform this based on how much we've moved so far. Still got a nice position, but then I posted in our fast money section that if you go look at Tesla on the 15-minute chart, you're seeing the money flow clear as day, man. Stage 3, there's the RSI. Stage 4 decline, right? Starts to set up, went to break, didn't work, came back down. There's our anchor point. We're back up into the box, which is super bullish. And I was saying this thing's probably going to rip, man. And then look, it just explodes up on the 15-minute. Where did it stop? RSI got extreme. Actually got it twice on this run up. So again, that's combining multiple time frames. I want to trade in the direction of the daily. So on the daily, this pullback that you see here, you can see it clearly on the daily. It was just a couple bars. So if you're looking at the daily, that money flow pattern was just these two little bars here. There's two bars that came down, and then where it came down, and then it went back up a little, and where you got it, that created the stage one on this lower time frame. So if you're chasing these hot stocks, that's the way to do it, is you wait for a little pullback, and then it sets up, and then you're just trading this pattern right here. See what I'm saying? Pretty cool, man. Pretty cool. It's actually from God. No, I don't worry about wash sales. I use a pattern day trader account, and I can move in and out, 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 in and out. And sometimes people will say, well, what about taxes? Well, fuck, don't go to work if you don't want to pay taxes. Like, just sit at home on your ass, don't do anything. You won't pay taxes. But if you're going to trade stocks and make money, you're going to pay taxes. That one's always weird to me because nobody ever goes into a job and's like, do I got to pay taxes on this? But when they get into trading, they're like, oh, taxes? It's like, yeah, bro, taxes. You made money. Like, yeah. Or they make them complicated. Should I file an LLC? And it's like, no, just trade. Just trade. You don't need an LLC. You don't need a company. You don't need you just need to trade. You need to just shut up, sit down, and fucking trade. Stop making it fancy, man. Just trade. Just be quiet and trade. That's all you got to do. Stop following all these people. Just trade over and over and over and over. And like every day, like no excuses, every day. Just do it. If you do that, man, I promise you, I've been trying to encourage people to, like, if you're gonna day trade or trade short term, man, I would not be running filters and scans. I don't do all that. I know some of my friends do. I know Mike from the Wealth Squad likes to run scans and filters. I don't run any. I just watch the markets. And here's another example with Uber. I bet if we take this down, I haven't even looked, but let me take it down. Yeah, you can see the big pattern, man. Runs up, goes over, comes down, starts to go sideways. We got that little dip just like Tesla did, but it came right back into the box. And when it comes back into the box like that, we know that's super bullish. So we are right back in that same box, man. What does that mean? It means it's rejecting this and it's coming back. There's your breakout. So if you're short-term trading it, boom, RSI into the close, sell it or trim it down, however you want to trade it. A lot of day traders just take it off. You're a day trader. You're going to go to bed with nothing on there. You're going to wake up in the morning, start it over. Now, problem with following a stock sometimes is they can trend, and so you got to wait for your entrance. So that was my game when I day traded a lot when I was younger, is I would sit and wait on pullbacks, just like we just did. I would wait for a stock to run up, have this little pullback, and then I would get on there on the lower time frame and wait for the setup for the trend to continue. And you saw it here, like all of these little pullbacks, I would drop down and wait for the trend to continue. That's how I've been trading TQ. I trade in the direction of the daily. I use all pullbacks to set up for the stage one around this pattern to then execute. And all I got to do is systematize it. Like, what does that mean? Clearly, what is the stage one? What is the stage three? What is a breakout? What is my target? And how am I going to use the indicators? We use 6 of them. And then it's just repetition, man, over and over. And don't get sidetracked, man. Don't get fucking sidetracked. As soon as I start showing people this, they're like, oh, but what about the Golden Cross? What about Fibonacci's? What about Elliott waves? You know, what about options? What about, it's like, dude, shut the fuck up and just do this over and over and over and over and over and over every day consistently. Don't ever stop until you've done it for a long time and then add other things. You know, most people are trying to do too much shit, man. It's like, I mean, some of you guys, I'm trying to get out of the swimming pool. So TQ is a great one. If you want to do more shorter trading or swing trading, this thing moves every day. You don't have to worry about earnings. It's here every day. Look at all these moves. Stage ones, run-ups, pulls back, stage ones, run-ups. I mean, these are just days. They're like, we had 2 trades today, 1 yesterday. Big stage 4 decline. Well, you shouldn't have been in it. It's just stage 4 decline. And I wouldn't have switched to the SQ or anything. It's still an uptrend. So this just goes without me. I'm just waiting to try to get in. You know, so we've had a bunch of them, man. This is find what works best for me. Most people don't know what works best for them because they're too fucking stupid and they don't know about the market. That's the God's honest truth. And most of the time when people ask me questions, they don't even know the question to ask because they don't have enough experience to know what question to ask. And then when they get in, they start doing all this bullshit. And then you start watching all these people on YouTube and Twitter and you go look and you're following 50 traders. You can't know shit. It's impossible. Most of them don't know shit, guys. Most of these guys on YouTube and Twitter don't know jack. And that's the God's honest truth. Because anybody who's been trading for a long time watches them, knows they're full of shit. Or they catch one cycle and everything runs up for 9 months and everyone's a fucking expert now. You know, and it's like, no, holler at me in 7 years when you've done 7 fucking tax returns and you've been trading for a while. You know, like that, holler at me then when you're not 14 years old. And that's the truth, man. It takes time. And the moment, you know, you see these guys showing you all their stuff and things, this is not a trader. Most of them, you know, maybe not 100% certain, but most of them are not. Most of them are lying between me and you. I don't believe them. I don't believe any of them, guys. And I don't watch other traders' content. I really don't give a shit how anybody else trades. Even my friends, I have no idea what they do. You know, I tune in and watch for a minute sometimes, and then I get bored. If it's not me teaching stocks, I find it fucking boring. I'm going to be honest. Most of the guys that I see teach stocks, it's horribly boring. It's fucking horrendously boring. They're not funny. You know, it's just, it's not good. It's terrible. Like, I don't know who you guys watch, but it's hard for me, man. And also I'm not open to new ideas. I'm gonna be very clear. I'm very close-minded when it comes to that because I know what works. And so I don't give a fuck what they're doing. And you're gonna have a very hard time mastering anything if you're open to new things, man. And I hear this all the time, like, you want to open up, be looking. No, you don't. Close your fucking, be very narrow fucking minded. If this works for you, it works. Don't look at anything else. To hell with that guy and him posting this and that. Don't even worry about him. You know, Manny's one of the few dudes that I drop in and watch. And if he got a large following, I'd probably stop watching, to be honest. It's just, where's your tax return? You can see mine. Come on in. Oh, she's asking him. Yeah, show me your tax return. Do you find that keeping the RSI at 14 for a day trading is accurate? Yeah. Yeah, it adjusts with time. Yeah, when that guy says, look at my Lambo, say, cool, let me see your tax return for trading. Yeah, I use it right out of the box, bro. I mean, if you find some reason 10%, you want to drop it to 10. I know a guy that uses 3 RSIs. He's got one set at 7, one at 10, and one at 14. And as it moves up, I mean, I don't know. I trade the money flow, and almost always the RSI works fine, or we hit a previous high. And then if we go into a stage 3 and start to roll over, I'm getting out anyway. So I've just always used it out of the box. I don't believe in back testing. I don't believe that works. I think it's all nonsense. I don't believe in running it through some computer and some computer is going to trade some automated bullshit for you. I think that's all nonsense. All nonsense. Right. Absolutely. Most of it comes from showing courses. Now, I do believe you can test some things. I'm not saying you can't test. I just don't believe in backing it up. Now, if you were doing algorithmic trading, that's maybe a different conversation. But there is some finesse involved, and at least in the way that I trade, there is some of that. I mean, but no, I'm not a big fan of back testing. Nothing wrong with paper trading. I would keep it real. Like on E-Trade, you can paper trade. I don't know if you guys know that. And if you were going to start short-term trading, like we were doing with the 15-minute chart, I really would recommend that you get in there and day trade it and buy what you think you would be. Like say you bought 1,000 shares, well, trade it. Use the paper trading thing and you do it. If they give you 100 grand, don't buy a fucking 100 grand. You're not going to do that in real life. So just buy what you would really buy and practice it and work it out. And I would do that for months before I put real money into trying to day trade. I really would. You'd probably work out a lot of bugs. I'd be really trading on the side, like I would be swing trading, longer term trading, but I would really sit and practice any day trading things that I came up with. And I hear people say sometimes like paper trading doesn't work. I don't know. I don't know about that. I don't know if that's true. I definitely am a huge believer in practice. I don't know how you would become proficient at playing basketball or football or any other thing in life without practice. So to say you can't practice when it comes to stocks, that doesn't make sense to me. It's not real, but damn, I don't want my doctor practicing on me. Like let him practice on a dummy and then he can work on me, So I think it's something to it, man. So, get in there and practice it. Yeah, but I mean, be careful. He says he changed it on Pinterest. Be careful. That's called form fitting. Be careful trying to fit things to one particular thing. So I trade the whole world, right? I trade gold, commodities, oil, bonds. I trade everything. And so the money flow's got to work across everything. But you Airbnb beat stock up 11%. Cool. You very easily could form fit everything and then you're going to have problems. But if you truly were just trading one thing at all, like if that's literally the only thing, yeah, maybe you play with it a little bit and adjust it. Maybe you don't use a 20-day, you use a 18. And maybe you find, like my buddy Daniel, if you saw my podcast interview with him, my buddy Daniel uses a 10 on the MACD instead of 12. I mean, whatever, to me, it's all basically the same. Yeah, this is TQ 15 minute. So any intraday trades, that's what I do it on 15 minute. Any shorter time frame, I can't work. I can't function. I find 15 minutes works each, you got 15 minutes in between bars. So it gives you a lot of time. My buddy Daniel uses 30 minutes, trades the TQ. Is there a big difference? Not really. Pull up 30 minutes. It's a little more round maybe. Big nice down moves. There's your stage 1, runs up. Big one's over here. Stage 4 decline. There's your stage 1. Bam, look at this one. Huge. Stage 3 comes down, goes sideways. Little pop, didn't really get much. Boom, into a stage 4. So over here, didn't do much. But then, we're running again. So if you do that though, just, narrow it in. And you can practice this on E-Trade. You can get a practice account, man, and play away. Yeah, WM's nice for buying whole, but I've just never been able to get it cheap, man. I got to buy shit cheap. It's nice now, though. It's under the 200. Oh, we're on a 15. Hold on. What the fuck? Oh, yeah, Airbnb's flying. What do we think? We've been in Airbnb, man. You should have already been in that stuff. Already took profits. There was your last buy chance. We ran it up. I took half off up in here, so good to see it go. Now somebody may say, "Oh, I wish I wouldn't have took half off." No, no, that's the money flow rules, man. That's my rules. So let it roll. Like it's fine. Let it keep going. It'll open up tomorrow and sell off. Probably take a little more off. Um, Let me back this up for just a second. Yeah, and keep a log here, man. You'll see mine. Like keep a log. See, I sold half my Airbnb. Um, I try to be transparent. So every move I make, I post it here. You can go back and look. Look at this one right here. Slowly building JO. Let's look at that real quick. You guys don't know anything about JO, man. Ain't nobody here cool enough to be in the JO. That was over here. That's coffee. Where are we at? 1205. Adding to left, adding to JO. Coffee. That one creeped up on us. I don't know. We're up about 16% in it. So anyway, that was a slow goer, man. But it's going. So anyway, if you go to petersreport.com, I post mine there, and you'll see I got lots of losers and lots of winners. But if you compare this to my book, you'll see why I'm making the moves. And this is delayed time. Like obviously we post it in Discord, but the point of this is just to help you try to understand the book and how, closed ERX, but then we got new swing trade in ERX. We got back in it. We're trading it. So I closed it on the 2nd. I'm back in it on the 8th. Why? Market change, man. That's called trading if you're a trader. Some people call themselves a trader and they can't take a loss. That doesn't make you a trader. That just makes you a shitty investor. So that was right here where we closed it. And then what? It went down, put in a pivot point, came back up. Now it's a stage 1 buy. And what? So our target is like right around in here. So that's a swing trade. Why? Because oil's too expensive here, man. It's too expensive here. Oil stocks are overvalued. So I would trade them, but I'm not adding to any buy and holds. Back down in way back in here, yeah, we're adding to buy and holds, but not up in here. It's too expensive. They're overpriced. Does that make sense? Let's see. It says, what chart tributes you got for your chart? Do a little digging, man. Click my bio link. Don't be lazy, bro. Want me to come to your house? I'll sit down at your computer and type it in for you. Hey, man, send me your address. I'll come type it in for you, bro. Send me your login. I'll come put it in for you. Let's see. Goddamn, I wrote it in the newsletter right here. You can go look. It'll tell you. But don't bother clicking a link and going over there if I could come to your house and do it for you, right? That's it, man. That's all I got. I hope you guys have a good week. Hope everybody could hear me on YouTube. Appreciate all the birthday wishes. And I'll go have some beer and celebrate that, man. And I'll see you in Discord if we're trading together. If we're not, hit me up if you want to trade. Unless you're kind of an ass clown, then don't hit me up, okay? We don't need any of that. If you're cool, though, let's do it. You got to have my book first, man. So you got to know what you're doing a little bit. And then we try to hold each other accountable, keep each other going. We're a little weird, though, man. We like when stocks come down. I know some of you guys get all nervous and shit. We like them to come down. We like crashes. We like stocks to fall apart. We like big moves down. And that requires a certain level of maturity that a lot of people have a hard time struggling with, meaning I like them to come down. You remember when Exxon was $25? I liked that. I was buying a bunch. Now it's overpriced and I hate that stock. Everybody likes fuck oil stocks. Look how these things are so damn expensive. I liked it at 25. I don't like it at 116. I own a bunch of it. Got about $100,000 of these oil stocks, but I don't like them right now. I like all the shitty stocks now. In price, I mean, not in quality. So you get what I'm saying? Get on the other side of the register. Don't chase these hot ones. You want the bad. You want the ones that have not done too well. But that requires a certain amount of investor maturity, and hopefully that's what we can. Sometimes you just need people around you to keep you in that. And if you like to trade, we like to trade. So separate. I don't know. By the way, on the way out, separate your trading account from buy and hold. It will do you a world of favor. That way, when you're trading, you're trading. When you're investing, and you can wear that right hat and hit the button when you need to hit the button and not hit the button when you shouldn't hit the button on your investments. Does that make sense? Like completely separate the two. Separate them. It'll make your life much easier and make your trading better, and your investing will be much better. Disney, I don't know that I'd get all out of Disney. I think I might trim some, but I definitely wouldn't get all out of it because I think that thing could keep growing here, man. But good play on that one. All right, man. God bless.